Mason, welcome to the show. Justin and I we haven't done our best lately. Life has kind of just kicked us in the nuts and we've just been so busy. There's a lot of really good things that are happening and we'll probably fill the world in on what all those things are at a later date, but we were just excited to be back in the studio. Sorry I sound like, I don't know, RFK Jr.
I like RFK Jr. as well.
He's a good dude.
It was,
it's just not fun to sound like him.
Yes, that's his only flaw.
I'm surprised he doesn't have like one of those Bane masks, like where you can use AI to like make your voice into something like much more stronger. That's what I do.
No comment.
Yeah, no comment, but I think that would be
Mason, so what's going on, man?
not much. Just like you guys, it's been a while since I've been on a podcast, so it's good to be back. I've been in build mode. I think all of us have, it's since like the bear markets of 2022, a lot of the bad companies, I'll call them, got washed out. And then strong companies just start rebuild, reposition. So just been heads down, just rebuilding and really excited for what's to come. I think this cycle is going to be one of the best.
So has your main focus this year been Blockware?
Yeah. So, full-time CEO and co-founder of Blockware. I've led Blockware since the start. In fact, I started the company. And Blockware spun off into a couple of different businesses and we do a number of different things, but I've just been focused on Blockware mainly for over 7 years. And I've been mining for 10 years now, almost. So it's been a long road. This is all I think about. When you guys go, I have a wife. Before I go to bed, think about Bitcoin mining. It's messed up. Eventually, I got to get out of this space. But we're here for now. For now, I'm still here.
That's exciting, though, man. And you are kind of one of the original dudes that's been around for a long time. In fact, we've talked in the past, but we never got to actually even see each other face to face. So nice to meet you. Why don't you tell us a little bit about Blockware for those of us who, well, not us, but those of the people who listen, which is like my mom. Why don't you let her know what Blockware is and kind of what you guys do?
For sure.
And I know you touch on a lot of different stuff, but kind of the high level.
Yeah, I'll go to high level. I mean, basically, we enable your everyday person like your mom to be able to mine Bitcoin. So to do that, we had to roll out, a full set of products. So, you see other miners and public miners, claim vertical integration, and maybe they are. We're vertically integrated in mining, from soup to nuts, and our goal is to be the largest service provider. We're not out there to be the largest self-miner. So our goal is to enable mining for the masses. We are after retail. We are after everyone. Our goal is to onboard people to Bitcoin and Bitcoin mining. So Blockware sells mining rigs. So we enable you to mine Bitcoin. We put out research. So we teach you how to mine Bitcoin. And we put out research that covers Bitcoin, micro and macro analysis. We develop technology. So we're actually a software company. And a lot of my background before Blockware was in software. So we created a platform where you can buy and sell rigs instantly. So your mom can be mining Bitcoin in just 3 mouse clicks, and it's Bitcoin native. And if your mom wants to sell her mining rig a week later, she can. We actually package Bitcoin mining rigs and their energy contracts on chain. So that's kind of like our centerpiece. We call it our marketplace. And then we teach people how to mine with our research. And we also do, OTC selling. So for a long time, we process large trades. Our clients range from the largest miners in the world, right? Like public companies buying and selling thousands of rigs to Joe from Kansas who's buying one machine. Outside of those things, do other stuff, pool firmware, other types of software, other type of services. We just rolled out and partnered with OnRamp so people can buy Bitcoin on our platform. So we're just trying to make it possible for everyone to mine Bitcoin.
How do you sell people? Let's just Justin Mom as an example on why you should mine versus just buying. I mean, we all have our reasons that we're in the space, but for the everyday person, How do you convince them that this is the route they should go?
It's the $1 million question, right? And it's why we're all here. It's like, why are all these miners out there? Why do they exist? Mining done properly is the best way to dollar cost average Bitcoin. So you just take out returns. What mining enables you to do is arbitrage a daily purchase. So you receive Bitcoin revenue, just like any miner would. If you're mining gold, you're revenuing gold, on a pro rata basis, maybe daily, and your output is the amount of Bitcoin that you mine, and your cost is mostly tied to energy, right? So every single day you're profiting your revenue minus your cost, which is energy. So you're buying at a discount daily. So I like that trade. And then secondly, looking at like return. So done properly and done with the right technology at the right timing, and your timing changes, right? So even my narrative and what I may tell somebody changes because I'm constantly looking at the markets and analyzing what the new posture is. But mining done right should outperform Bitcoin, and it does. And a lot of the people we've onboarded, I'd say a vast majority of them, and that's why I'm still here, have outperformed Bitcoin. And that's the true thing that, if you can say that you outperformed Bitcoin, which is the best performing asset over the last 15 years, then you win. And that's why mining is here.
So along those lines, before we started recording, we were talking a little bit about the mining companies and their profitability. If people are able to outperform Bitcoin, why are so many of these miners losing money?
Wow, it's a loaded question. It's a good thing.
Sorry.
We put out research recently where we have a full analyst team. We've been putting out research since 2018. Part of the reason why I started Blockware was, mining was centralized in China. Like over 99.5% of mining was in China. I was like, I need to start a company that brings mining to the United States, North America, and other places to protect Bitcoin. I've been involved in Bitcoin, for far longer than I wanted to start a mining company. And then, all these public mining companies popped up, and there was some massive arbitrage back in the day of wild profitabilities for those that deployed in like 2016 through 2020 cycles. And now we're seeing, public miners, potentially, having centralization issues, just like I saw a long time ago, right? If a miner controls over 20% of the network, which a couple probably do, then we have trouble. But looking back to your question, public miners can be deceiving if you actually analyze their costs and their balance sheet and what they do. And when you truly look, zone out and we comb through all their financial statements and we actually line up their costs. And so when you factor in, all of them will go out and say, hey, we mined this much Bitcoin this month. Our cost of energy was this. And then they stop and they like spit that out. And then recently, like in the last few months, you'll see how, they sold all the Bitcoin they mined. You're like, that's weird, right? All of our goal is to stack Bitcoin. So it's a little concerning that all of them, are selling. And I get there's different markets and they need capital for X, Y, and Z. But like my theory is like a true reason is all of them are actually losing money. Pretty much every single public Bitcoin miner loses money. And what I mean by that, when you factor in all their costs, so their costs for executive compensation, their costs of capital, right? Their costs of their debt, their costs of financing, their costs of their ATMs. They have fees tied to everything. Their operational expenditures beyond their energy. I mean, a lot of these teams, a true Bitcoin mining company should be pretty lean. Like I've seen great operations, like 100 megawatts run by 5 people. Like public mining companies will have 100 people, like 1 person per megawatt, maybe even more, like 3 people per megawatt. So their costs are just outlandish. So when you factor all that in, our analysis shows, looking at the sector, like the best performer, has a break-even cost of 80,000 Bitcoin. So Bitcoin has to be 80,000. And some of the worst performers, their break-even costs are
80,000. I need to hear that again. 80,000 is their break.
Yes.
Are you serious?
I'm serious. And
so are we saying that they're only reporting essentially half cycle economics in all of their public reports? So it's not truly taken into the full consideration of the actual cost? Because I think I've read a bunch of these, and I think it was like everybody's touting it's somewhere like half that.
They report all of this, but like you have to piecemeal it together, right? Like that's what I had our analysts, we combed through and we put together lenses. And yes, so like the break-even ranges right now is between 80 and 140,000. Even though they go out and advertise, they do have cheap power costs, but they have all these additional costs, right? There's a cost of depreciation. There's a cost of executive compensations. Most of the public mining CEOs are making like $25 to $50 million a year. Like look at CleanSpark, right? Like all of their CEOs made over $25 million last year. And then, they're constantly diluting shareholders with ATMs. They're constantly taking on new debt. And a lot of companies are taking on Bitcoin debt. So you have to like pay debt on Bitcoin and what if Bitcoin outperforms. There's just a lot to unpack, right? And it's, trust me, I'm just like you guys. When I looked at this, I was like, this is nonsense. But here's the interesting about public companies, right? They can just go out. One advantage they have against everyone else, against private miners, and you see a lot of good private mining companies go under, is they have access to more capital. They can go get debt so easily for cheap.
Yeah. So there is a path to them being profitable. It's just the bloated G&A and the people per megawatt should come down significantly. And then the economies of scale actually takes place. And so then back to, like you said, you can actually outperform Bitcoin.
Yeah, their fleet efficiencies are off right now. So like a lot of these pubcos are like in the 26 to 32 watts per T range. They're lagging the market. We've got 13.5 watts per T air-cooled miners out right now. So you're half as efficient as the market. I think the public companies, one thing that hurts them is they move slow also. And I've worked in public companies, and I was a management consultant early on in my days. So I had clients like Toyota and Harley Davidson and Allstate Insurance, JP Morgan Chase, Goldman Sachs. I sold software to some of the large public companies in the world. And another problem that public companies have is they move slow. They have so much corporate governance. They have such a long chain of approvals. I know people that work in public companies, and they're like, they have to go talk to 10 people to get an answer for a simple question. So one thing that you need in Bitcoin mining, from my experience, is agility. And I think public companies lack that. So, if I was spinning up a new public company, and Mara actually did a good job of this for a while, even though, you look at their financials, and I'm not saying these companies will fail, but they had like 3 people for a long time, and they had like 3 people with 5 to 10 exahash. That was a very efficient company. And their initial model was just to use third-party hosting. That's why they could get away with that. And that made so much sense to me. Now they've changed their model, and now they want to, completely own and operate. And that's part of this too, is like, we're seeing a paradigm shift. A lot of these public miners are going into the HPC sector. That's because they're losing money in Bitcoin mining, and people are paying a lot of money in the AI and hyperscaler and HPC space for that same computational power, but in a different sector for that power cost.
That's what was going to be my next question was, especially considering you guys do so much research and are involved on that side of things, what do you think the HPC kind of shift I've seen, how do you see that playing out over the long term? I think short term, there's obviously going to be a lot of people jumping towards those opportunities that have been in the Bitcoin world. And obviously the bigger groups are probably the more likely ones to do that, just from access to capital and additional capitals on the market. But how do you see that impacting the Bitcoin mining world over, say, the next 5 years?
It's another tough question. And I'll say, like, there's,
Man, I'm just full of them today. We don't do any shows for like 3 months. I got all kinds of good questions.
You can answer them in a million ways. So I'll say, like, I'm personally torn, right? So I'll answer this in 2 ways, and I'll start by this. Do I think that AI is a bubble? In theory, yes. I think it's like grown at an insane level. Like you have NVIDIA, their earnings are reporting right now, recording on 8/28. I don't know if they beat or lost. They're trading at 40x, sales, right? That's insane. No one else trades anywhere near that multiple. And it's just,
except MicroStrategy.
MicroStrategy is an awesome use case, right? Like they're the only ones that outperform, and they have great playbook. So part of me is like, will this maintain? And I could be wrong, right? The other half of me is like, this, we're seeing, the true rise of artificial intelligence. We're seeing a whole new ML and AI language being developed. We're seeing integration and like things like smart driving and all these use cases, and ultimately like employee replacement with AI. I use ChatGPT every single day. I can have it write me a 15-page essay right now, and it could be done. I wish I had this when I went to school, right?
Oh my gosh.
I'm torn. I'm like, is this a bubble or is this here to stay? So like my answers could go.
I think both can be true.
Right.
I think that initially you saw the same thing with the .com bust. Did that mean that the internet went away? No. It meant that there was so much hype that you overbuild initially and lots of cash goes to waste. You saw this in oil and gas in the shale revolution.
You've seen it in Bitcoin mining.
Yeah. In shale, we torched $200 billion, right? That completely went to waste. However, on the other side of that, now we've become really, really good at drilling wells, right? And now we have cheap energy for so many people. So I think that, yes, I think that AI has definitely been probably overbuilt and overinvested in, and a lot of that's going to go away. But the few that stay behind are going to lead the path into like the promised land.
I think we're kind of just getting started to the overbuilt. Yeah. So like, and honestly, I still think there's some running room before we get there. But I've just tried to think about the large scale opportunities right now for power. Right, that's the key to everything. It's the key to Bitcoin mining. For big miners, and it's the key to the HPC world is the energy. And there's just not as many opportunities to go pick off now that are kind of easy pickings. There's stuff you can dig through and find and make available for those opportunities, but there's not a bunch of them. And as the economics kind of shift in favor of the groups that have a lot of capital, which is the Bitcoin or the HPC groups. Like I can see a lot of the capital that would have normally went to Bitcoin mining going to that world, and the growth of the hash rate slowing down. But then I think you're going to see that overbuilt at some point, and the economics will kind of start looking better for Bitcoin at that point, and you might see a little bit of shift back and hopefully a balance. But I could see it dinging the growth rate of the network over the next couple of years, just from the speed that it's been on. I think a lot of the large scale sites that bring in all the exahashes and all that are going to start shifting towards some of the AI stuff. The economics are just so much greater. You know what I mean? The margins are so much greater. Now, the capital required is significantly higher. But I don't know. That's kind of just looking at like the way the free market system works. It kind of seems like I could see it playing out that way. But I don't know. I was just curious to see what you thought and how you guys have evaluated the impact of the AI world on the Bitcoin ecosystem.
So what's driving the demand of the HPC sector, and really like all you see, the Bitcoin miners that are pivoting, right? It's driven by them selling contracts, right? Locked in and fixed contracts. And the center of that space is a company, CoreWeave, right? They are one of the fastest growing companies I've ever seen. It's like a similar sort of MSTR. They're private, so they're not as much covered as they could be if they're public, if you follow their growth story. And what they're doing is they're an example of the Core Scientific deal, right? They literally paid them hundreds of millions of dollars to say, hey, take out your Bitcoin mining infrastructure. Let's turn this into a tiered data center. Keep in mind, HPC requires 100% uptime, data redundancy, fiber network, pretty much air conditioning in some cases. It's a little better if you do hydro or immersion deployments. And H100s are like insane, right? And now the
Yeah.
H200 is coming out. Like an H100 server can be $350,000 per server. So it's a lot more capital dense, to your point. But at the center is CoreWeave, right? And what they're doing is they're positioning computational power, and they're building a marketplace for consumers to come buy their or rent their computational power. So right now, I think there's consumer demand that is propping up hyperscale pricing. I think it's overpriced. I think that will nominalize. So if I don't think some of the deals that we're seeing right now in the AI and HPC space, I don't think that a 25 cent per kilowatt hour profit margin or locked margin is going to last. It's going to come down, just like it's like we're seeing like the early days with the Bitcoin mining, right?
Mm-hmm. Yep, I think so too.
Yeah, and I think Bitcoin mining will always have a place, right? There's always a place for Bitcoin mining, because I think Bitcoin's going to outperform, but beyond that, Bitcoin is a perfect grid stabilizer. Which you guys know exactly.
So I was going to get at too.
We could go in that rabbit hole. It literally enables infrastructure to be built. We can turn off and turn on. We create demand response programs. We are the Texas grid. We are the global.
Right. And I think that the more AI plays a role in, large scale, huge power sucking projects, the more you need a load balancing Bitcoin mining load on the grid, in the same system. You just have to. The curtailing is required. The grids are always going to need that. And the more solar that comes on, creating all the volatility, you're going to need it even more. And so I just think that it can be an impact on the Bitcoin mining world. But I think long-term, it makes Bitcoin even more required from a utility standpoint. Man, I got a terrible echo again, but we're going to power through.
It's not, we can understand you. Yeah, I agree. I think at some point in time, I'd see that normalizing. And it's interesting from a reporting standpoint. You see all the Bitcoin miners, they used to report on exahash and center around projected exahash. Now all of them are also reporting on their total power capacity, right? Cypher just acquired a site in West Texas, and they're like, we have now 2.5 gigawatts of power.
Right. Instead of
pipe. Yeah. It's completely changed. Because the people are like, oh, because I can go use that power for AI and HPC, I can use that power for other stuff. They're just becoming.
It's like an oil and gas when you've got I've got this many wells drilled and how much production we have online, but we've also leased 200,000. We got PUDs. We've leased 200,000 acres, and that's kind of the equivalent.
Yeah,
it's really cool.
Yeah, it would another example of how much this whole thing is similar to oil and gas. It's virtually the same thing.
So talk to me about the M&A side. So we've seen some transactions recently. What is driving that? And where do you think things are kind of going over the next 12 to 24 months?
So I think the main driver is, a bear market hit, right? It started in 2022 and a lot of that was it wasn't necessarily caused by Bitcoin miners. They made some bad decisions, but ultimately it was caused by entities within the generalized cryptocurrency sector, like FTX and BlockFi, and et cetera, right? That just blew out everyone and capitulated Bitcoin price, and everyone was lending money to everybody, and so many people got washed out. So I think I literally sat here in June 2023, and I was like, we watched nearly every public Bitcoin miner almost go bankrupt, almost every single one. They're all cutting deals and getting on track, and then the market recovered a bit. So naturally, margin compression took place. We've seen the Bitcoin network continue to grow. We saw a little relief around the halving, and Bitcoin price running stable. So we're seeing M&A because consolidation is going to be natural, and you're going to see the strongest and largest companies just consume, smaller private entities, and sometimes make bigger headlines. Recently, Bitfarms bought Stronghold, right? Public companies buying public companies. Riot's doing a textbook corporate attack and aggressive, financial takeover of Bitfarms. They almost own 20% of Bitfarms. There is some Wild West stuff going on out there. And I think it's, survival of the fittest, and those that can grow the fastest may win. They're taking risk, right? Because where are they getting this money from? They're issuing more shares, they're issuing more debt, they're taking risks that could bite them down the line. So then you may see, further consolidation. I think one of the parallels that I see, there's an amazing chart that you can go look at some point in your life, and you look at the top 10 banks, right, in existence, and literally there's this a pyramid, and each one of them acquired 5,000 companies along the way. And then there's JP Morgan Chase, there's Wells Fargo, there's BNY Mellon, whoever it is. That's what's happening right now, and it makes sense.
Why does Riot want Bitfarm so bad?
Well, at first, it looked to be like a very strategic play. I mean, I think Riot's an interesting company. In fact, the former COO of Riot works for Blockware now, Megan Brooks. So I'm super familiar, and I advise them for a while too. So they've changed business models quickly. I think I really liked at the one stage of their business model, this off topic, when they were basically an energy company. They were just crushing. They were crushing their ERCOT grid. They were setting the standard, and they were making more money selling energy back to the grid than mining Bitcoin. Well, fast forward, I think one thing Bitfarms has done really well is global expansion and finding cheap power globally. And Riot's centralized in Texas. They can run so it makes sense to me for them to go after global markets, because when you're at a public scale, it's you have the opportunity of somebody from France or somebody from China, somebody from Japan to buy your stock instantly. So if I'm after global users, I want to acquire a company that has a global fixture and also did it tactfully. So I think Bitfarms is personally undervalued. I think they have a great energy portfolio and they have a global presence, and they've long time been a really good operator. But zoning out of that, Riot saw an opportunity, and it mostly was tied to what the corporate governance, right? If you read Riot's plan and what they're after, they zoned in on one thing. Bitfarms has changed CEOs several times in the past years. They've changed several leaderships. The chairman of the board just resigned, and he was the CEO before that, and then his friend was the chairman. They've gone through this massive change, and that left Bitfarms vulnerable. So Riot attacked. They saw the opportunity, they saw an undervalue, they saw a global play, and they saw a weakness. And then they started buying shares, and then they made it public. And some of the stuff, it's almost comical, some of the stuff that goes out there. I'm not going to say X, Y, or Z, but you could read their readings. You're is this real? I don't even know.
So if I understand you correctly, they value having a international presence so that they can raise money easier, since despite, I guess, the fact that they were making more money as an energy company selling energy back to the grid here in Texas. But since everybody loses money and the only way to stay afloat is continually raise money, why not have access to international markets instead of just domestic markets? So then we'll go out and acquire a company that we see as potentially vulnerable to give us the exposure that we need internationally.
That's a personal thesis from me. It may not be their exact thesis.
Could make sense.
But they went out. I think the sure reason that they'll go out and publicly say it, and they're literally going out. They called some board meeting, right, and they're after board positional shares, and they're going to the shareholders, and they're they're paying a premium on the Bitfarms share price. They're doing a textbook takeover. You read some of the great investors of all time, and this is what they do. They go and aggressively take over companies, and they're doing it. So we'll see what happens. Outside of
Bitfarms, is there any other companies that you feel would be good acquisition targets for any of the public miners?
Yeah, I mean, look, Cypher. There's a mysterious company that offered a couple $2 billion for Cypher, right? TeraWulf is an interesting company. They have, they've been high in the ranks recently with like Stanley Druckenmiller and some really large names, investor names buying shares. You have Iris Energy was one of the early movers in the HPC and has a massive portfolio. And they have a ton of experience in power markets. Each pubco has a story, and everyone's there for a reason. I think the most easy targets are the smallest market caps. So, I mean, I'm not going to name names. A lot of these people are my friends, but like, if you're a small market cap Bitcoin miner, there's somebody looking at buying your company right now for a number of different reasons. It may not even be a Bitcoin miner. It could be somebody in the energy space. It could be someone in the hyperscaler or HPC space. And some of these companies are NASDAQ listed. They could be under NASDAQ requirements, right? Mm-hmm. You have to actually maintain a certain market cap or share price to maintain listing on NASDAQ. So they could be, you may see like an acquisition or a merger take place that had to take place because of like a delisting. So there's all these like items that you track, right?
I was doing a little bit of analysis. I'm curious what your opinion is on, it was across like 20, I don't know, 12, 20, however many public Bitcoin mining companies there are, on kind of their market cap on a per exahash basis and kind of what that broke down to. And you had a lot of concentration. The bigger ones are on a certain number. I don't remember exactly what that was. And then you had at least the other half where it was just a super, super widespread. Why do you think that is?
I think first off, it was a new market, and there wasn't proper coverage. Finally, we have Wall Street's here, so we have real sell side and buy side analysts that cover and put out forecasts and price predictions and price predications, etc. So like in the earlier days, and I still think there's a mismatch. Even the analysts, some of this stuff isn't properly valued. Like, how do you value a company?
And that's what I was trying to get to, is just like, in the oil and gas side, a lot of it's very subjective and how much weight you put into the probability of certain things, right? And that's where the money is honestly made, right? And in markets that are opaque, there's a huge opportunity to make money there, potentially in the Bitcoin mining side too. But it begged the question of like, how do you properly value a public Bitcoin mining company? And I walked away more confused than I was whenever I went into it.
Yeah, I mean, I used to, back earlier in the coverage days, like maybe in 2019 or 2020, put out research and I was like, there's a value on current exahash, like $1 per current petahash, right? Now we're in exahash range. That's what I used back in the day. And I was like, then there's a value on $1 per future petahash. And then I look in and I measure, you can do multiples on gross profit. A 10x seems pretty standard right now. You see some companies get huge multiples because they're in a different space and they have, higher margins. So I think each of these companies are unique and they're tough to value. One, I'll give you an example of one valuation I kind of understood was recently Iris Energy had their share price forecast go up substantially by some large analysts. And a lot of it was because of their power assets. They had their power assets were repriced. They were underpriced in the past. So just looking at their power assets, they're like, this company is worth way more, and not even taking in their exahash and their future HPC revenue and, et cetera. I think if I were doing it now, I'd probably look at their power assets. I'd look at their machine assets. I'm a huge believer in machines always have value, right? Even the S9 still is worth something. And then I'd look at their current exahash, their future forecasts. I'd look at their current HPC revenue and their future HPC revenue. And I just, those would probably be my key metrics. And then then I would zone in on their profitability, which brings in OpEx and cost of power. It's become more complicated. Like a year and a half ago, no one was doing HPC stuff. And then some of these guys are also mining alternative cryptocurrencies, like Ethereum. It's just complicated.
Yeah, I was going to see who you think the next players to make the Cypher deal. When I read that press release, I saw that there was a $3 megawatt hour trailer on it. Well, I know those had basically been, those type of trails had been not a part of the Bitcoin mining groups for a while now. So that kind of gave me an idea that is purely a AI play. Is that do you feel like that's what that is going to be? And of the ones that are shifting, who would you say are the biggest ones that you think are going to, like Core? You mentioned Core. Sounds like Core's shifted that way a lot. Who would be the next one to do that?
I mean, I think all of them are looking at it.
Really?
And the smallest players like Miggy, right? They just announced like that they're entering the HPC space. Like every single one of them is in on this because there's people are paying premiums and they're willing to put big money into paying into the future. Like Core Scientific's contract was like one of the most crazy things I've seen, right? Gave them a few $100 million to repurpose their infrastructure. They paid for that cost. And then they prepaid them like future streams of future revenue. That was the deal. I was like, this is crazy. That's why
Core sounds like they got their stuff together, man.
They turned it around. I think they're a good company. They really came out of bankruptcy strong, and I knew their CEO Adam prior to that. He's done really well. I would bet on Core right now. There's some sleepers. Bitdeer is a sleeper. The famous Jihan Wu is heading with Bitdeer, and he just took over mysteriously, right? And they brought back, and they hired Harris, who actually created some of the first ASIC chip design back in 2014. And there's this whole lawsuit that Bitmain and Harris are suing each other. But I think they're an interesting company, and they're also creating their own miner, and they're also in AI and HPC, and they have this massive cloud compute business, right, where they're reselling hash rate to the Asian market. So they bring an Asian presence. They're not valued. They're an example. It's like, why aren't they trading high on the stock price? People like in the States, where a lot of like the NASDAQ money comes from, like don't value like foreign run companies well sometimes. That's what I've noticed. So I think they're undervalued. But I think, everyone's looking at the HPC space because there's a lot of money to be had there, and it's more than they're making Bitcoin mining. Now that may change, right? I think 2025 is going to be a catalyst year. The year after the halving is always Bitcoin's best performance year statistically. Q4 of every year is a good year for Bitcoin. We have a presidential election coming up, right? With potentially some positive Bitcoin policy being put forth because of that, and they're trying to win votes. So there's a lot of really good momentum. So in a year back, like some of these companies that pivoted to HPC may regret it, because what if Bitcoin takes off? And they sold their soul, and they sold hundreds of megawatts and future contracts and reposition everything. They're like, no, wait, I need to go back that direction. Well, luckily, I think a lot of them can, and that's why they're just acquiring so much power and power assets. So they have the ability to kind of shift between both business models.
Yeah. Do you think, and I don't know how much Blockware kind of evaluates powered markets around the country, but do you think there's any markets like, you got MISO, you got PJM, you got TVA, ERCOT, all everybody went heavy Texas, it seemed like, for a long time. There was a lot of stuff in PJM. Some of these other areas seem to be picking up a little bit more. I know Oklahoma's gotten kind of hot. What's your feel on the different markets around the country? And do you think any of them are areas that miners should start looking more at, or is there kind of just, hey, ERCOT's it and everything else is playing catch up?
Yeah, I mean, ERCOT certainly has its advantages, and it has super cheap energy. You may not have 100% uptime, right? Because you're selling back in a demand response program. I mean, what I look at is like a number of different things. I think you have opportunity zones, which are really nice places to deploy across the United States, and those are tied to different grids. So that's something to look for. Cheap power, obviously. Grids are great to deploy into, but they're becoming more expensive. Energy as an asset class, you see, when I started in the space, like, it seemed like everyone had 3 cents, and then everyone had 4 cents. And now, like, if I'm building at scale, not in ERCOT, and I'm looking on PJM or MISO, or I'm getting 5 cents, right? So energy naturally is going up. So you want to look for a combination of good big policy in the state. Do they support Bitcoin? You want to look for tax advantageous scenarios like opportunity zones, We own and operate sites in Kentucky where we have economic development riders. The government gives us some subsidies for hitting certain employment thresholds and tax credits. You look for that. And then you look at energy price and domiciles. You need access to resources, et cetera. Bitcoin mining is great because you can kind of, we own sites in Bellefonte, Kentucky, which has 5,000 people that reside there in the middle of nowhere. And we have everything we need there. That's cool about Bitcoin. But you still need like logistical resources. It helps if you're close to an airport and major transits. I think for me, like it boils down to energy costs, and then I look at tax advantages and opportunities, and then I look at policy in the state. I'm not deploying in California right now, right?
Right. For a multitude of reasons. Yeah, that's with the election coming up too. I think the state that you're deciding to set up operations is going to be very, very important. If we see a Kamala Harris administration, I could see things not being great from the policy front towards Bitcoin mining. So I think that's something people should heavily consider when they're evaluating where to deploy their capital in a mining opportunity. So yeah, it's an interesting world we got coming up this year. So, well, look, man, I always enjoy listening to you talk. I think you provide a valuable service for the whole industry just from the research you put out and the role you've played for a lot of miners over the years. So if there was any plug you could put for Blockware, what would it be?
Listen, I think our ethos is to strengthen Bitcoin at its core. And we're after like onboarding new people. So that's why we put out research and content and products. I think, the one thing that we're centering around, if I put a plug, would be our marketplace. I think the reason why we developed it was to solve liquidity in the space. There's two things that have liquidity on in mining. One is your Bitcoin mining rig. Usually you sign, a 1 to 4 year contract, and mining rigs actually change in value a lot more than you think. So having the ability to sell your machine at any time. And then secondly, you also need to be able to exit your hosting contract, right? This is the everyday person. Not everyone's going out and building data centers and taking on 10 plus megawatt sites. That requires a special person. And it's really tough. And I've built sites and advised tons of sites. And I've seen some succeed and some fail. And sometimes they failed and they did everything right. So we're just enabling the everyday person to mine Bitcoin through our marketplace. It's all Bitcoin native. It's super easy. You can be mining Bitcoin within 3 clicks. We deploy our marketplace in different data centers. All of them are like managed or in theory by Blockware, but sometimes we partner with world-class operations. We leverage their in-house techs and we put our layer of services on top of it. So you can buy, live hashing machines and sell them as you please. And that would be my plug. Like, check out our marketplace. There's good deals. It's decentralized. So sometimes, players in the space come at me. They're like, an S21's trading at $20 a terahash or 22. And I'm like, it's decentralized. There's people set the prices and good deals sell and more expensive deals sit there listed. It's like an order book. It's like an exchange, right? I could have a Bitcoin sell price of 100,000. People aren't going to buy that until it reaches 100,000.
Well, I appreciate it, man. We should have you back, and if you're ever in Houston, let us know. We like the in-person shows more, so we like to have you in the studio. We have a drink.
No, that sounds great. Yeah, I agree. I'm just getting back on the podcast tour like you guys, so definitely.
Yeah, I know.
This a lot, and now I'd love to do it in person. I think those are better too.
Oh yeah, man! Wait till like November.
Yeah.
Today actually feels way better. It's like 95.
Yeah, I don't know how you guys live. I'm on the East Coast, but one thing I
don't know how we do it either, man. I've been here 20 years.
It's like 100 degrees every day for like 7 months, right? Like,
it sucks. It's terrible. It's a good thing there's so many cool, nice people down here.
Yeah. Where are you based out of?
I was in New York City for a while, but I just moved to Connecticut. So,
Okay.
but I grew up in Missouri, so I've got Midwest background. I know Justin, we're both Cardinals fans, Blues fans.
I love that meme I sent you the other day, Justin. It was like, it was a map of Missouri, and it showed St. Louis and Kansas City, and it was like, why do both of the largest cities in Missouri look like they're desperately trying to get out of Missouri?
They do. They're like on the line. Oh man, whatever, Jake.
Missouri.
All right. Well, Mason, thank you for coming on, man. Really appreciate it.
Cool. Thanks, guys.
It was a lot of fun.